Hi everybody, it's Cassandra Bickel with ERA Sunrise Realty, and I'm here with Katherine France with Element Home Loans. Hi Katherine, how are you today?
I'm doing great. How are you?
I'm doing great. We're going to talk about one of Katherine's favorite things to talk about, and that's mortgages. So Katherine, we had talked about doing a side-by-side comparison on the conventional loan versus the FHA loan.
Right. So a lot of people look at FHA as a first-time buyer loan because it has a lower down payment, a little bit more leniency on your debt-to-income ratio and credit things like that. Conventional actually has a program that's 3% down, so it's a good. It's comparable to that FHA program. One of the things that FHA has that's beneficial over a conventional loan is a fixed mortgage insurance payment. And that means that it doesn't matter what your credit or your debt to income is, it's always going to be the same. Whereas a conventional loan, that mortgage insurance is based on your credit and your debt to income ratio.
Okay, so FHA recently was 1.75, correct? And they just recently went down to, what was it again?
So the 1.75 is a mortgage fee that's rolled into the loan amount. The monthly mortgage was 0.85%, and that's always based on the loan amount. So it actually drops every year. Your principal amount drops. FHA recently released that they are dropping it down to 0.55%.
Okay.
So it's a huge savings on your monthly payment.
Okay, and then now with FHA, that mortgage insurance never goes away though, correct?
That's right. Unless you're putting a larger down payment, that mortgage insurance is there for the life of the loan. But the benefit to that is that it is tax deductible, so you can actually write that off on your taxes.
So theoretically, if you are that type of person that buys a house, you never refinance it, you make all your payments on time for 30 years, your final payment will include mortgage insurance.
Yes, it absolutely will.
Okay, and that's not the case with conventional.
Right. So with conventional, it actually falls off once you reach 78% loan to value, or over a certain time frame.
Okay.
So typically that time frame is about 10 years is when that drops off automatically. If you pay ahead on your mortgage and hit that 78% loan to value, then you can drop it earlier. Or if, like in this market, values are increasing quickly and you reach that 80%, 78% loan to value, then you can actually request to have it dropped off sooner.
Okay. Now, but you can't do that 3 months in, correct?
That's right. You do need to make, and it depends on the servicer.
24 months of on-time payments.
Right.
That you have to make, and then you can request to. Now, do you have to do an appraisal, or is each company different?
No, you do have to do an appraisal if you drop it before that time period is over. Appraisals usually run about $500 to $600. So if your mortgage insurance is, let's say, $200 a month, then you're going to make up that cost of the appraisal pretty quickly. So it's worth looking into and seeing how old your mortgage term is.
Okay. Now, everybody always comes to me because I'm the agent, and they're like, I want that first-time home buyer program. And typically they're referring to FHA financing, correct?
Often.
But FHA is not necessarily just for first-time home buyers.
Right.
So what distinguishes who qualifies for FHA?
So FHA has a much lower credit threshold. We can go down to a 580. At least with my company, we go down to a 580 credit score. You can qualify for an FHA fresh out of a bankruptcy. You can have a foreclosure on your credit, so it is a little bit more lenient there. It also allows for your debt to income, so your total monthly income versus your total monthly debts allows that number to be a little bit higher than conventional loan does.
Okay. Now, if I'm buying an investment property, I'm probably going to use a conventional loan, but can I use an FHA loan for an investment property?
No, you cannot. FHA is for primary housing only.
Okay, so there are exceptions, but typically you can only have one FHA loan at a time, correct?
That's right. There is a mileage exception, so it has to be far enough away, but yes, you can only have one FHA.
So for instance, if you're being relocated and you're in a market, because I lived through this market back in 2007, 2008, and you're not in a position to be able to sell your house because maybe you owe more than what the house is worth, or there's an influx of properties on the market, and say you're moving 500 miles away.
Mm-hmm.
As long as you qualify for that extra payment, you can have 2 FHA loans.
Yes. Yep,
But that's the
loophole.
exception rather than the rule.
Exactly. Mm-hmm.
Okay. So, but with conventional, you can have multiple mortgages,
That's
correct?
right. Mm-hmm.
And it can be primary, investment property, or a second home.
That's right. Mm-hmm.
Okay. So are there any other big difference between FHA and conventional loans that people need to know about in advance?
Just right now, it's worth looking at both of them. We have a lot of borrowers that come in and they know they want the conventional loan because that mortgage insurance will drop off. But right now, the FHA rates are a lot more favorable than the conventional rates, so it's worth looking at both options.
But if you're looking at long term and you don't want to refinance and you know that you're going to be in the property at least 5 to 10 years, do you have one that's probably a better option, or is it each case is
its own scenario. It's really going to depend on your overall goals. It's going to depend on your credit situation, your income situation. And I will say the average life of a loan is only about 5 years. So you're more likely to either sell or refinance it within 5 years. So you might as well just go ahead and buy in today's money and look at both options favorably.
Okay. All right. Well, thank you so much for being here with us today. And I hope you got some value for that. I hope you understood it. If you have any questions, feel free to give me a call. Cassandra Bickel at ERA Sunrise Realty, 678-266-0723. And Katherine?
Katherine France with Element Home Loans, and our number is 706-530-5841.
All right. And as always, Katherine is licensed in predominantly the Southeast,
That's right.
Florida, Tennessee,
Florida, Georgia, Tennessee, North Carolina, and Alabama.
and I can help you pretty much anywhere in the world. I'm licensed in Georgia, but if you have any questions, I'm happy to connect you with a professional in your area. Thank you and have a great day.